realty players, they have seen a steady rally of late. That is also in the light of RBI's surprise pause on rate hikes. Now, will this spur more demand? Also, what does the sales scenario for commercial realty look like? And a lot more. We, of course, have Mr. Sahil Vachani, who's the MD and CEO of Max Ventures and Industries, joining us now. Sahil, good afternoon. Thank you so much for joining us. I know earlier your focus mostly was on commercial real estate. Now you've ventured into residential real estate as well. Tell us, what is the split looking like between these two segments? With the expansion plans that you have in place, what would that split be like? Will there be more focus on commercial, or will you have an equal focus on residential real estate as well?
Thank you for having me here. Good afternoon. So Max Estates, which is the real estate business that we operate, was only in commercial real estate, as you correctly mentioned. But over the last financial year, we have closed 4 opportunities, and we have split equally between commercial real estate and residential real estate. So we have one new office project in Noida, which is 1 million square feet, and another 1.5 million square feet of office that we are coming up with in Gurgaon. In addition to that, we have signed 2 residential opportunities, one in Noida, which is for 1 million square feet, and in Gurgaon for 2.5 million square feet. So in total, if you look at it, we have added to our portfolio about 6.5-7 million square feet over the last year. And this is split between geography, equally between Noida and Gurgaon, and also split equally between office and residential.
Do you plan to add more in FY24? Any targets for commercial and residential real estate for FY24?
We will look to evaluate more residential opportunities in FY24. Currently, we are focused on launching our flagship project in the coming few months in Noida for residential, and by the end of this year for Gurgaon as well. So we always are on the lookout for opportunities, and hopefully we'll close something towards the end of FY24 in residential.
Okay, so I'll ask you more on that, but I wanted your word on commercial because you've seen a lot of cycles here as well, right? While we were talking about the impact of interest rate hikes on residential, we did not discuss much of an impact on commercial, because that is something that globally at least impacted in terms of the banking fallout, what happened with commercial real estate. One, how is demand right now? And second, with so many new stores or bigger brands like Apple, for instance, coming to Delhi, do you think it'll have a better impact on rentals and it'll lead to higher rentals, so to say?
Yes, in commercial real estate, actually, interestingly, we are seeing an interesting phenomena, which actually is also prevalent in other parts of the world. It's a little bit of a K-shaped recovery model post-COVID, where good quality office buildings, which are very strong on amenities, which are very strong on infrastructure and heavy on customer experience, are seeing good demand, are seeing good traction. And we ourselves in Max Estates have seen very strong demand, even through COVID, when everybody was working from home. We have seen our flagship development, Max Towers, and our second development, Max House, both getting leased 100% at a price premium of almost 25 to 30% premium to the micro market. So we are seeing good quality demand. We are seeing high demand for good quality developments. However, we are also seeing that some developments that are a little bit older, not great quality, and not so much focus on end customer experience are seeing increased vacancy rates. The second element here is about what's happening in the US, and particularly in the tech space of slowdown. And traditionally, what one has seen is that in such a time with a lag of a quarter or two, the demand actually in India moves up for the technology companies, particularly those who, and though they occupy about 35% of the overall office space demand in India. So we are hopeful and confident that, with the cost advantage that continues to remain in India, and most of developments being able to be offered at sub-dollar square feet per month, that the demand from the tech players will also come back. And the third element here is the work from home, as you correctly pointed out. And increasingly, we are seeing that there is more of an acceptance of a hybrid model, where managers and employers are keen to get their people back into the office from an aspect of culture, from an aspect of managing them better. And therefore, we are seeing that there will be some move back into the office, although through a hybrid approach.
I just want to get some numbers, Sahil. What could be the expected rental income next year, or the growth in your rental income?
So we have closed the last financial. We closed the last year with an estimated rental of about 100 crores, and we are looking to add another 700,000 square feet of development in which is our flagship, our third project, Max Square, that's coming up in Noida, and then in a few years from now, the 2.5 million square feet of office space that we spoke to you about will be added. So in total, we are going to be looking at an overall footprint of close to 5.5 million square feet of office space that's going to be rent yielding for us.
Okay. Can you give us a sense of when the merger will come through between Max Ventures and Max Estates? You said in December it will take around 4 or 5 months. Where is it standing? And also, will you look at merging Max Asset Services as well?
So Max Ventures is our listed company today. It has only one business, which is the real estate business. This is after we exited our packaging business last year. And we're hopeful that by the end of the first quarter, somewhere in the range of June or July, the Honorable NCLT in Chandigarh will approve the amalgamation scheme before that, and Max Estates can be directly listed on the stock exchange, although it is quasi-listed through Max Ventures today, but directly listed on the stock exchange. So we're very hopeful and confident of that. In particular, Max Asset Services, it will be a subsidiary of Max Estates because its primary objective is to provide facilities management services and ensure and enable customer experience across all our developments. So it's a subsidiary of of Max Estates.
Okay. Last question before we let you go, Sahil. I was looking at your presentation. You said, of course, New York Life has a substantial chunk in the company as well. It also said that it will continue to evaluate further investments as strategic investors in the commercial real estate business. Anything which is in the pipeline with the ones that you just spoke about, the expansion plans that you have, will they be funding it, or will you look at getting some more debt?
No, we are not looking to get more debt. We are looking at equity. And in fact, we have already announced in the past month or so, New York Life's co-investment with us in our Noida office project and also in our Gurgaon office project. So this is their fourth consecutive investment with the Max Estates and within our real estate business over the last 5 years. So they've come in Max Square Phase 1, Max Square Phase 2, Gurgaon project, and also they own 23% in the listed company. So we're very pleased and delighted that they are our partners and continue to support us and validate our execution capabilities in the commercial office space segment.
Sahil, we'll leave it at that. Thank you very much for joining in. That's Max Ventures for you. Get into a break. On the other side, it will be us.